Hello, Warriors. Dale Pinkert at TradeGate Hub. Monday. Let's have a good week. Just keep in mind there are many central banks with a lot of news this week, especially ECB, RBA. Not sure if BOE is on the docket as well, but we also have an Opec meeting on Wednesday. So top it off with the NFP on Friday. You have to be nimble. So I just want to review what I've been saying for weeks, and you could go back and look at the videos. And I was saying all through this that the euro hasn't bottomed yet. The euro hasn't bottomed yet. This was a shakeout, cleaning out all the euro bears before it did break to new lows. And now we finally have made new lows for the break as of Thursday and Friday. So what you can see here that's different is that we are diverging, okay? So this is the first divergence on the daily. It means something to me. And, if you're not going to be, real leveraged up, I've been talking to 110.50 or so for the euro. I still think that could happen because when you look at some different time frames, like the 4 hour up here at the highs, we really never diverged, and we were well above 70. Same with the 2 hour up here. So we have the daily divergence, but it may have to do some work up here on the down here on the 4 hour. As you can see, we confirmed. I still think there's another break coming in euro, but we're starting to get close enough for government work. If you were, say, building a cash position, nothing wrong with owning one, down here is the 111. 20 was the low so far, owning euros because, on the turn, after the turn, looking for a sharply higher euro. What really stood out to me, and this was something else that almost everything, you should go back and look at last Wednesday's video in front of the Fed. Almost everything I said or recommended ended up happening. So, when you look here at the daily, I still think that we could make another new low. Moving over to the dollar, I described that all the dollar bulls were shaken out on this move, and that eventually we are going to take out this double top. This double top came in at 96.93. We're pulling back to it right now. It's possible we could get an even deeper pullback. As you know, my numbers were closer to the 98 level. This could also be a second drive too, where we get a pullback and then one more shot up. I've seen a lot of inflection points on NFPs, so it could be perhaps we peak Friday on a strong number. So that's something I'll be looking at. But I just want to draw your attention to something that I always felt that the Aussie, or believed based upon the daily here in Aussie, that we would make one more low. And that was because of this RSI reading at the bottom and all the way up. I said we need to make another low. Aussie really is the strongest performer against the dollar today, up 80 pips compared to euro, up 45. So a day like this tells me I'm on the right course for having the Aussie be part of the basket I'm looking to put together when the dollar high comes in. I still think there's a shot for perhaps down towards this trend line down here. That's going to take you down to about the 68.5 level. This is where I'm going to be interested in doing something in Aussie. Perhaps the RBA is going to tighten or do something hawkish, and that's in the market as we're rallying today. So we'll see. I still think that there's one more jiggle to the downside in Aussie, euro, and to the upside in the dollar towards that 98 level. We'll see. Last Wednesday, I said I don't believe that the yen has completed its move to the upside. And then we had this big rally into the Fed. When I look at it here on the daily, this is what I'm looking for sometime this week, up around the 117 level or so, for potential shorts in US dollar yen. It might be commensurate with some risk off, or perhaps one more push up in rates with the yen towards 117. And looking at the 10-year, that's what's happening here today. We're getting 10 years up 3 bips. I've been talking 2% to 10 for a while. So perhaps we get this push up in rates to 2%. We get the push up in the yen up towards 117. And then we might have a pretty good bond rally for a while, and yields will come off from those highs. That's a contrarian call on yields, but you know what? It was a contrarian call 2% 6 months ago. You know, no one was looking for higher rates, and then look how they manifested. So, you know, back here at 130 and the lows back here, there were a lot of people not looking at this as being a move back up to 2%. And I think that that's where we're going to go. But after that, I think there's a chance that yields fall all the way back to 1 or lower. So there could be some nice trades in TLT once we get this final flush in the bond market with yields going up. Maybe it's going to be, you know, down here. But that's what the yen is telling me, and reaching targets in 10-year yields is telling me to be alert for shorts in the yen up around 117, and to temper your bearishness in the bond market for a while as the yen sells off. Euro pound, you know, is acting technically in nice looking charts, still diverging. It's glaring on the weekly. It's glaring on the daily. Look at this new low. This is glaring divergence. Reminds me of what the SQQ did near the bottom. So, you know, I've been in favor of accumulating euro pounds for the last several weeks. Took a little off here, and still believe that this is going to be a nice turn. I know a lot of people think that we could get down towards these major lows, which are 80, 280, and we may not. So I still like the long side of euro pound, think it's going to perform well on a turn in the dollar. So talking about dollar sensitive commodities, let's get back to the gold. And on Wednesday, gold was trading up here. And I said, I know it's a difficult trade with troops massing at the Ukrainian border, over 180,000 troops at the border, and President Biden saying that an invasion was imminent. So sometimes the hardest trades are the best to do. So, you know, I was talking about when we were here, you could have stops over this high or the prior high. And you made some nice change here. Now, do I think this is the bottom in gold? I do not. Okay. I know it held important support. We could definitely bounce after this kind of slaughter. So if you took me seriously, you didn't get hurt by staying long gold, and you're going to have better levels. It's still my contention that gold's going to head down towards this 1720, 1730 level. This is about halfway there. This was over a $70 break. So, you know, another $70 and we're down here. So that's still my my patience of not getting FOMO on this rally here. I know a lot of you guys thought I probably missed the move to 2000, but now the jury's out again. If I'm right about 117 in the yen and one more shot up in yields, that could be the catalyst to take gold back down to 1720. Just like I think there could be a major dollar high at with one more advance. I think there could be very important lows in precious metals and the miners. Still believe, and had been talking about this too, that the stubble bottom in silver was going to be taken out, that we were going to have a capitulation move under this 2140 level. And in fact, with gold up $7 today, silver's really dogging it. It's up 1 or 2 cents. So gold outperforming, and with gold outperforming, perhaps the gold silver ratio has a new high in it up here, that we're going to get one more high while the metals are selling off and silver leads the way down in gold. Still think we'll see the 20 handle in silver, so being patient on it. In fact, a lot of the silver shares already are sitting at very close to lows. A lot of people trade this issue, AG, First Majestic making new lows. I want to see the silver shares start to dig in their heels with the physical selling off towards that 2050 level. But we are diverging, as you could tell on the daily. We're diverging here in AG. Here's the ETF for the juniors, diverging as well. I'm still going to be patient. Think I'm going to get even better levels to step into the minors should my targets in the physical be achieved. So that's my look at currencies and precious metals. And I think you need to keep an eye on the oil. I know it's, just like gold with the geo risk and an Opec trade. It's hard to, want to fade oil because, oil has recovered from every break. But if you want to take a picture of what a 3 drive to a top looks like, check it out on the weekly. All right. So the last confirmed high in oil was all the way back in March of almost a year ago, 2021. And then you had a 1, a 2, and this could be the 3rd drive up here. So I'm going to wait and see what happens. Maybe we could get, when I look at the 15-minute chart, had a little bit of a confirmed high here. Maybe we're going to make one more charge up towards the 88, 89 level. But I'd be very careful about being long crude up here. I know perhaps you've heard it before, but there have been times that it was worth heeding my advice, and that was back here. I know I was wrong trying to sell fib retracements, but at new highs, I'd be pretty careful. Looks like a 1 and a 2 on the daily. And I think the next big move in oil is not up over 100, but down. So looking for potential shorts there again this week. The weekly off number should be an area that we could pull back to, and that's right around the 84.76 level. If we close under 84.76 by Friday, you'll have a 2-week reversal. So getting back to taking a look at equities, Mike has put out some tweets, and I think it came from Zero Hedge, about how retail traders have piled into puts, and that could be fuel for recovery. I don't know if it's going to be a new high, but we could get back to this 45.50 level, 4,600 level in the coming days, with the public going in and buying puts with over the last month at record levels. That could be fuel for a short squeeze back up to 45.5, which was, my bull bear line was right there at this 45.5 level, right around here against this prior high. And then we had some tests and tags of it. So let me just redraw this. So there's a pivot. So if S&Ps can get back above 45.50, that's going to be pretty constructive. We'll see what happens here up at this level. So, it held 45.50, and then the next time through, it got hammered, and there were a couple of retests at 45.50 before we sold off as well. So, just something to really pay attention to. And, right now I'm neutral. Would likely give it a stab up here at 45.5 and risk maybe 46.5. So the euro, get ready. Yen, get ready for this potential line up here. I still think you could accumulate euro pound. And Aussie, giving a great signal today that it's going to be a star when the dollar turns, still being patient and looking for under 69 for that, and the dollar index coming off, but still think that initially if we hold this double top, that would be constructive, and think that we're going to test up towards 98. And that's a number I've been talking about since all the way back down here with the 93.5 breakout, 94.5 breakout. That's the way I see things, everybody. Mike's going to be on today. I'll be interviewing Mike and talking to Mike tomorrow. And Peter Goodburn's going to be with us Thursday. When Peter was here last in December, he was forecasting a severe correction in the S&Ps. I don't believe he thinks it's over, but the next step is he's predicting a top to this bear market rally that we're getting here in the dollar index, and then a resumption of the bear trend. And if you look at anything long term, the trend in the dollar, if you go back long enough, is pretty negative. And perhaps we're going to trade back down here at 87. I have targets. Equality would be 113 from here is going to give you about 85 to 82.5. So some important turning points setting up for this month in February. I hope that some of the things I talked about last week helped you stay out of trouble, and maybe you were even brave enough to take a shot on the short side of gold on the smash we had last week. So gold's, I still think there's another 70 left, so I'm going to be patient in gold. You could take a screenshot here, and it's still my contention that silver will take out the longs under 2140 before I get interested in buying the silver miners or the physical itself. I invite everyone to come and join us here in TradeGate Hub every day. We post, besides the videos, we're posting ideas and sharing our thoughts about the market, building a community. And community is really one of the best things out there in this new world that we live in. We're not in offices collaborating with people live, and we only have two eyes. And I hope that my two eyes have been helping you and guiding you. I don't claim that I'm always right. I just claim that I've learned not to stay wrong. You can always be wrong, but don't stay wrong. And there have been some pretty nice forecasts here that both Michael and I have been providing since we've been on the air. If you like what we're doing here, just give us a like and subscribe, and we'll keep you in touch with our thoughts into what I think is going to be a dramatic February for turning points in the precious metals and the dollar. So good hunting the rest of the day. I'll see you tomorrow with Mike Venezia. Good hunting, and remember, don't just count your bullion or count your oil barrels or count your shares in the stock market. Count your blessings. And we'll see everyone tomorrow for Turnaround Tuesday. Adios. Good hunting.